This week in the parish of bourses and market structure, ASX's Graft Machine, Hong Kong Exchange's Soar, one beautiful big bill, Tel Anger and Squeamish Sebi. My name is Patrick L. Young. Welcome to the Bourse Business Weekly Digest. It's the Exchange Invest Weekly Podcast, episode 360. Good day, ladies and gentlemen. This is a very brief reduction of highlights amongst the key headlines from the week in market structure. All the analysis of the many events and happenings from the past 7 days can be found in Exchange Invest Daily Subscriber Newsletter, the unique guide to the Bourse business, sent daily to your inbox. More details at exchangeinvest.com. Over in bid carnage, family crypto banking was a topic this week, arising even beyond the usual Trump derangement syndrome heartlands. The OCC, that's the Office of Controller of the Currency, approved the Trump family crypto company for a trust charter, or if you prefer that news through the lens of the Communist News Network, brazen act of self-dealing, lawmakers' watchdogs alarmed after Trump regulators let Trump firm start a bank, or, as the New York Lie put it, a blatant and gargantuan conflict of interest. The truth is out there, but probably not always in American mainstream media. If you enjoyed this excerpt, you may be interested to know you can read Bit Carnage every day in Exchange Invest. Alternatively, if you want to follow Bit Carnage, the daily update on happenings in the world of crypto and digital assets, you can find Bit Carnage as a standalone on Substack. In the world of exchanges, mainstream exchanges themselves unmasked. The biggest political donor in Australia is the entity protecting its egregious monopoly in market structure. Who's buying dinner with Albanese and what they're paying was the AFR headline. A financial review analysis of 20 years of data revealing the shape and scale of the country's pay-for-access system. And I quote from AFR, the biggest corporate donor to both major parties is the Australian Securities Exchange, a company with a monopoly dependent on government legislation, which has poured $2.8 million into party coffers since 1999. As Gubu, that's grotesque, unbelievable, bizarre, and unprecedented as it is unsurprising, ASX has shamed Australia and now looks dubiously like an engineer of hideously contorting influence. Whatever the truth, the optics are coyote ugly on this one. The fact the Australian media cannot further join the dots together and see that it will look to outsiders that ASX directly maintained a monopoly through influence purchase is also disappointing.
Thanks for listening to Exchange Invest Weekly. We welcome your feedback. You can contact me directly, patrick@derivativesvision.com, with any comments. Meanwhile, if you enjoyed this show, we would welcome you giving us a thumbs up. Or, if you have time, a positive review will always be welcome, wherever you find this podcast.
Meanwhile, NSE, they've begun the valuation exercise with a mega IPO. Permission is happening. It's all go, go, go by the looks of it for the NSE IPO. Slightly further south, the Hong Kong Exchange results reinforced the contract extension for CEO Bonnie Chan announced earlier in the week. Hong Kong Exchange's interim results are revenue up 19%, net profit up 24%, interim dividends sitting at 0.95 Hong Kong cents on the dollar. No wonder Hong Kong Exchanges extended the CEO Bonnie Chan's contract this week with results like this and the excitement of the RMB offshore ETD yield curve beginning thanks to the recent launch of 5-year CGB futures. ICE's CEO, Jeff Sprecher, praised the One Big Beautiful Bill, which is, unlike the Clarity Act, something with potential to make better markets, particularly in energy. Tel Duffy, on the other hand, was extremely annoyed, and understandably so, at the CFTC after recent events, resulting in a row with the Mono Commissioner Selig. The trouble is, confidence in the CFTC has been buffeted by another chairman who seems to owe more allegiance to crypto than mainstream markets. In Hong Kong, the Hong Kong exchanges have been facing an interesting challenge, a myriad of opportunities, in fact, which may prove a challenge depending on how the growth mindset is adopted. At the same time, one could argue that the diversification drive focus problem identified by Reuters is more Hong Kong exchanges has a wealth of opportunities, a vast wealth of opportunities. In fact, the issue is how the firm truly implements a growth mindset, and that's always a problem in big corporations, which usually do incremental but not radical expansion well, even in one area of focus. Meanwhile, the NSE IPO appears to be progressing smoothly. Indian regulator Sebi still cannot come to terms with the exchange stock trading on its own platform, but the market regulator retains what appears to be a co-reversion to free markets, alas. In Manila, integration of the bond and stock market platforms continue apace as the Anand Stock Exchange celebrate their upgraded optic system via Euronext, and Nasdaq, they're confirming their 23-hour trading will start in December with a new overnight session. Exciting times for the overnight trading market as the level acquisition runs alongside the plan, although, of course, at an exchange level, the SIP is unable at the moment to truly enable exchange trading. Or is there a power move here which helps move that rather Soviet committee forward? With NSE on the track towards their IPO, we also had alongside the Hong Kong Exchange's results this week, NZX of New Zealand, their interim report for 2026, the first half of the year. Operating revenues up 13.3%, net profit up 18%. Very encouraging results from NZX, which came out the day after they unveiled their new CEO, Hisham Mirza. Deals, not a super busy week in the parish, but all the deals were on Exchange Invest Daily, the newsletter no person can afford to be without in capital markets and market structure. For the sake of this podcast, some edited highlights. The Intercontinental Exchange have extended their $3.9 billion revolver. They've secured a $2 billion term loan, and they've got a $6.2 billion bridge, which has been cancelled. In other words, their M&A is well on track for the acquisition to close of Market Access. Meanwhile, the TMX Group, they've completed the acquisition of RAFI Indices from Research Affiliates. Meanwhile, if you fancy some financial insights with moving pictures, check out our live stream Tuesdays, 5 o'clock London, midday New York time. It's the IPO video live show. Catch the back episodes on LinkedIn and YouTube via IPO-VID. Don't forget as well that Exchange Invest is now a 7-day-a-week platform. We started a Sunday supplement a few months back. You can read the Saturday and Sunday supplements. They are free of charge on more macro topics. Monday through Friday, though, still a subscriber-only publication. The water cooler of the bourse business, the exchange of information, Exchange Invest, the unique perspective on the world of market structure. Our finance book of the week this week is Naked Airport, a cultural history of the world's most revolutionary structure, building on our Aerotropolis theme of the course of the last fortnight. In product news, Kalshi are seeking to launch perpetual futures on equity indexes as it moves in on traditional exchanges' turf, according to the CNBC headline. Clearly, one issue, though, is the lockup of licensing on the big indices, hence the use of Mercube as the benchmark for this Kalshi-driven index of 500 stocks in a perpetual future. Over in technology, as I mentioned earlier, Anand Stock Exchange launched an upgraded electronic trading system running Euronext optics trading platform, and the PSE, the Philippine Stock Exchange, as well as working towards a better, faster, and more voluminous integration of the PDS bond market system that they bought earlier in the year. Their investments in technology are expected to reach a giddy 2.9 billion Philippine pesos, or $46.2 million in real money. Elsewhere, as I mentioned at the top of the show, Hisham Mirza has been appointed Chief Executive of the New Zealand Exchange. There was a profile in Financial Times of Stefan Bujna, which was headlined, "I don't have any close friends in business," the Euronext CEO in a decade shaping Europe's markets. Confirmation there that Bujna is going to be stepping down in 2027. And meanwhile, Hong Kong Exchanges have appointed Carl Wong as Head of External Communications to better orient communication with the outside world on behalf of the vastly exciting opportunities which HKEX is nailing down. With his pedigree, Carl Wong is an ideal candidate to help expand Hong Kong Exchange's external communications. Meanwhile, leaving the biggest retail emporia to one side in our summer season of Big Worlds this year, we had to turn our back to some more serious and pressing global issues. Apparently, the good folks of Canada can't buy Cheetos vodka. Nope, can't say I missed that one either, but anyway, even the Premier-in-Chief of the Canadian Federation, Mark Carney, is struggling to get the States to put US booze back on the shelves of the liquor stores. The States control import, it seems, so it's a bit like Norway, I suppose, where folks camp out to arbitrage the few bottles of First Growth Bordeaux the agency buys and then marks up modestly, allowing a colossal profit for those who are willing to camp in often inclement conditions in Oslo. Anyway, antipathy to the Trumpy one up north in that place that was once being remarked about as the 51st state, and indeed that 51st state malarkey has not played overly well in targeted nations states, perhaps Alberta accepted, and it seems the media are reckoning a return to the stores of US booze in Canada might not result in a wild turkey profit bounty, as it were. Bourbonward and upward to some other export markets, perhaps. And on that mysterious and magnificent note, thank you for listening to this EI Weekly Podcast C60. Join us daily at exchangeinvest.com, or if you have any exchange you'd like built, get in touch. My name is Patrick L. Young, and I wish you a great week in life and markets.
This show relates to the business of bourses. It is not to be construed as investment advice, nor are we making any investment recommendations. Please consult an investment advisor before you make any investments, and for goodness sake, do your due diligence and do not make investments without complying with the regulations in your home state. Exchange Invest cannot be held responsible for any investment decisions made as a result of our program, which is for entertainment purposes only. The material herein is copyright Patrick L. Young at the date of publication, while our music and sound effects are sourced from copyright-free sources. Thanks for listening to Exchange Invest Weekly, the exchange of information.